Hi, my name is Jane Marie Bong, metric number 284801. I will be the first presenter of our presentation. So I'm going to explain about what is ABC, which is known as activity-based costing. Alright, so now I'm going to give a brief of history of activity-based costing, which is ABC. Based on the articles that I have read, ABC was first appeared in the 1980s as a costing method capable of overcoming the limitations of traditional costing systems in the face of economic and technological developments. Managers required a more accurate method of tracking the revenues and expenses and identifying non-financial factors for the amount reported in the financial statements and records. ABC was created because of the overhead includes several factors such as the property taxes, managerial wages, and utilities. Alright, so now I'm going to move on to the definition of ABC. ABC is a costing method in which the overhead and indirect costs are assigned to related products and services. It is a system which focuses on activities performed to produce the products. Costs are charged to the products based on individual products' use of each activity. There are few steps in assigning the ABC. First, determining cost pools and measures. Second, assigning cost to cost pools. Third, calculating rates. Fourth, assigning cost to cost objects. And the last one is prepare management reports. Alright, so for the individual terms that use in ABC, for the overheads and indirect costs in ABC, it can be referred to the administration, finance, distributions, and utilities. The activities are the tasks that must be completed in order to complete the product. Activity cost pool is the total of all fixed and variable individual costs associated with a business task. For examples, machine setup, maintenance, purchase ordering, and invoicing. The cost drivers are the activity that cause or drive costs. If this does not occur, there is no cost is incurred. For example, the number of orders sent, number of machine setups needed, and number of invoice sent. The cost driver red is the cost pool total or cost driver. This indicates the amount of indirect and overhead costs associated with that specific activity.
Hi, my name is Evelyn Su Li Ting and my metric number is 284457. I will be the second presenter and I will be present the traditional costing. Traditional costing. What is traditional costing? The traditional costing system is an accounting method used to determine the cost of making product to make a profit, and it is based on allocating overhead manufacturing costs. This system relies on calculating predetermined overhead rate and applying the rate to a given metric. Traditional costing systems use estimate overhead rate for a specific cost driver. A cost driver is an element of the manufacturing process that may incur costs such as managerial expenses, packaging, machine hour, machine setup, quantity of material required, cleaning, and maintenance. Here are the steps to calculate costs using the traditional costing method. First, identify overhead costs. Overhead costs are costs associated with products that do not directly impact the product, that can include manufacturing and non-manufacturing expenses. Second, estimate the overhead cost for a specific time period. Specific time period are a month, quarter, or year. Third, choose a cost driver to use in your calculation. The cost driver should be linked significantly to production, like machine hour for highly automated production. Fourth, estimate the figure for the cost driver. The cost driver should match the time period you choose for the overhead cost estimate. Fifth, calculate the predetermined overhead rate. The predetermined overhead rate is based on your estimate. To calculate the rate, divide the estimate overhead cost by the estimate cost driver amount or quantity. Last one is apply the overhead rate to your product. Multiply your chosen metric by by the predetermined overhead rate to determine the estimate overhead cost for the product.
Assalamualaikum and salam sejahtera everyone. My name is Muhammad Nabil bin Ruslan, ID student 284487. Now, I will explain about the differences between ABC and the traditional costing. In the industry of accounting, there are two alternative ways to assign indirect overhead costs to the product, which are the activity-based costing, also known as ABC, and the traditional costing. Both approaches calculate production-related overhead costs, assign these costs to the product based on a cost driver rate, and then adjust the cost estimate accordingly. The two method accuracy and the complexity differ from one another. Traditional costing, which assign overhead costs to the product based on the arbitrary average rate, is often more imprecise and simplistic than the ABC. ABC is more intrinsic and precise than the traditional costing. According to the how product use activity, this method first allocate indirect costs to the activity and then allocate the cost to the product. For the ABC, it assigns both type of the cost to the product, which are the manufacturing costs and the non-manufacturing costs. The traditional costing, on the other hand, will only assign manufacturing costs. However, the ABC does not assign all the manufacturing costs, whereas the traditional costing will assign all the manufacturing costs. The ABC cost is the best method. Each of the ABC cost pools has its own unique measure of the activity, while for the traditional costing usually relies on the volume measure such as direct labor hour and or machine hour to allocate all the overhead costs to the product. The ABC is much more complex than the plant overhead rate and the departmental overhead rate. Following that, the ABC costing will employ more allocation bases. Its volume measure will be passed by the other allocation bases, which are not related to the volume of the product. In the traditional costing, the bases are usually solely based on the volume measure. Direct labor hour are the most commonly used allocation base in the traditional costing. The more allocation base there are, the more complex it will be.
Hi, my name is Yong Ken, Nomometric 2X7324. Now I will present about the example of ABC and traditional costing. First of all, let me look into the example questions. MA Sundram Berhad is making two types of product A and B. MA traditional costing system has two direct cost category, which is material and labor, and one indirect cost pool. The traditional costing system is allocate the indirect cost on the basis of machine hour. Next, we can see that the information related to the MA production for the most recent year is also given. We can see that the unit sold, selling price, direct material cost, direct labor cost, production runs, material move, machine setup, machine hours, and number on inspection for each A product and also B product is given from the question. After analyzing the indirect cost pool for MA, the owners identify 5 activities as generating indirect costs. MA collected the following data related to the indirect cost activity as below. So from the table, we can see that the 5 activities which related to the indirect costs such as production scheduling, material handling, machine setup, assembler, and inspection is given with their own activity cost and also their activity cost driver. So the question is require us to calculate the unit cost for product A and B based on the traditional and ABC costing system. First, we are looking into the traditional costing. If we want to use the traditional costing, the first step we need to calculate the plant-wide overhead rate first. The formula for calculating the plant-wide overhead rate is using the total overhead cost and divide by the allocation basis. In this question, the question is mentioned about that we are using the machine hour as our allocation basis. So we need to using the total overhead cost, which is 233,000. We need to divide by our total machine hour, which is 10,000. Then we will get our POR rate, which is 23.3 per machine hour. After getting the plant-wide overhead rate, we need to divide it by the machine hours to get the total overhead cost. So we can see the yellow highlight there is the answer for our total overhead cost after we divide our rate with their machine hours for each product A and B. After that, to calculate the total manufacturing cost, we need to add our machine overhead cost with the direct material cost and also the direct labor cost. After that, we need to use the answer and divide by the unit production to get the final answer, which is the unit cost. Next, we are looking into the ABC costing. If we want to use the ABC costing, there are little difference when we calculate the overhead costs. In the ABC costing, we need to calculate the overhead cost by each type of the activity. For the example, we have 5 activities related to the indirect cost, which is production scheduling, material handling, machine setup, assembly, and inspection. So we need to calculate 5 different rates based on these 5 type of activity. For example, we see into the production scheduling activities, the overall cost is 95,000 and the activity driver is 125 production runs. To calculate the rate, we need to using the overhead cost divided by their own activity driver, which means that we are using the 95,000 divided by 125 and then we are getting the rate which is 760 per production run for the production scheduling activities. So this method or this formula we will repeat 5 times to calculate all the rate for each type of the activities. After we have calculated all of the rate for all types of the activity, we need to using the rate and divided by their own activity driver, then we can only get the overhead cost. For the example, for the production scheduling activity, we are using the rate which is 760. We will divide it by with their own activity driver and then we will get the overhead cost for the A product which is 30,400. Same goes to product B, we are getting the overhead rate which is 64,600 after we times the rate with the activity drivers. After we are calculating all of the overhead costs, we need to sum up and then we will get the total overhead cost which is highlighted by the yellow color. After that, we need to calculate the total manufacturing cost and also the unit cost with the formula same like the traditional costing, which we need to add our total overhead cost with the direct material cost and the direct labor cost to get the total manufacturing cost. Then we will divide the answer by the unit production to get the unit cost.